All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's off and rolling here this morning. Let's start with the challenge. We have Dollar General, which we got into yesterday afternoon, and picked up some Dollar General calls. It sold off into the close a little bit weaker here this morning. So down a little bit on there, but nowhere close to exit levels or anything like that. So we'll continue to hold it. Chart looks like this right here. So just a little congestion right in this 156. 156 and a half area. So anyway, that's Dollar General. Not making any changes there to it. There are no new signals on the board this morning, but we do have some crossover action happening on the bear side. IBM, Coca-Cola, AT&T. None of these really have much of a chance of triggering. Maybe AT&T if it rallies a little bit, but it's just not very close there, so I strongly suspect it won't be. And I say rally a little bit for a bearish trade simply because it's moved more than two average true ranges to get where it is. After their earnings here this morning. And then on the upside, we have Boeing, Microsoft, and Vulcan Materials. Microsoft, no chance of triggering. Vulcan, neither. Boeing, it's one where I would sure love it to trigger because I'd love to play it, but it doesn't look like it's very possible to trigger. Coming off a brand new low, there is a potential for a trigger because we did have this little kind of dip this week and then rip back up. But where the 20 is and where the Stoke 39.1 is, typically we're not going to see bull signals come in with stocks that have those visual elements. The visual elements aren't part of the algorithm, but we can match them pretty decently. So as things sit, nothing, really on the radar right there. But again, yesterday, nothing was on the radar till the afternoon, and then we saw Dollar General make its move, for a signal. So we'll see how that, plays on out here. Okay. As far as the overall market here this morning, you can see kind of opens up higher. Just saw a continued sell here this morning. Bouncing up a little. You'll notice the volatility is just bigger, right? The moves are just bigger. And 20 points down, now 10 points up. And that's what I expect that we will continue to see. And we saw the metrics shift. We saw the market vibe metrics shift. And when they shift the way that they did, this is what we tend to see. Just greater movement, greater volatility. Now, this isn't exactly high volatility. This isn't exactly big movement, right? From a historical perspective. But, it's definitely the biggest we've seen so far, here in 2020. So, that's, what we have kind of playing out right here as far as, that zone we talked about yesterday, kind of that retracement zone where you kind of look to short things. We're still not up there, right? We're still not up there and still have a ways to go to get up there. So will be interesting. It doesn't mean it has to get up there, but for me to want to aggressively short some things, that's what I want to see. And so far we simply are not there. Boeing reported earnings here this morning, along with a bunch of other companies. We saw Apple after the bell yesterday. Boeing is one where the stock is up 2.5% on one of the worst earnings reports in a very, very long time for Boeing, right? And we talked about Boeing and this action that it had last week as being a potential bad news bottom, right? This is just awful news again for Boeing. And okay, big bottoming volume coming in. All right, did we see some sort of upside? We started seeing some upside. Then the market, had its down day, but Boeing has kind of rebounded back here. And, today, some pretty bad earnings helping to push it higher. If you traded back in 2009, in March and April of 2009, this is a very familiar type of pattern to you because we saw a lot of companies have some bottoming volume right ahead of their earnings and then have some pretty ugly earnings and actually go higher. And, it was a pretty good sign bottoms were in. And we saw it with Apple. We saw it with Alcoa. We saw it with a whole bunch of companies during that time. And we don't have that same element going on in the market right now. But with Boeing, its individual story has been so negative, with so many issues, so many problems. And are they all solved? No, they're not all solved. They're not even close to all solved, here with it. And the earnings report is pretty nasty. Take a look here at the earnings relative to expectations, right? The earnings came in at minus 2.33 a share, $2.33 a share loss versus an expectation of a $1.73 gain. That you just don't see that very often, right? It's pretty rare in stocks in general, but for a Dow component, it's even more rare, right? You look at the revenue, huge revenue miss, right? Now, if you look at it, can you blame it on the 737 MAX and all of that? Yeah, you can. But, Boeing did something interesting, and I haven't finished going through all the Boeing numbers here just yet, but I was curious, once I saw the initial numbers, have they kitchen sinked the issues? Meaning, have they basically thrown all the bad issues in on this report and said, it's going to be ugly, so let's just pile on. Let's get everything negative in here and, take our medicine. That way things are better going forward. And so far, it does look like they've done that to some extent. I don't want to say 100% here, but does look like they've done it to a decent degree here. And if you look at kind of what to expect going forward, this really bad quarter makes the future comparables really easy. And, look at Boeing's numbers here on the revenue. They've been minus 2%, minus 12%, minus 21%, minus 37%, right? So, next year at this time, they don't have to compare to a 28 billion revenue. They have to compare to an 18 billion revenue. That's a huge difference, right? So, if they come in even at 25 billion, they're looking at a monster revenue increase in terms of the comparables, and that's what we see with Boeing here. We've talked about several companies whose comparables are improving over time, and Boeing, this is one where the numbers are so bad, right, that they're absolutely atrocious. That, you're going to be looking at 200% growth, 300% growth going forward, should they hit their numbers. Now, if the Boeing MAX doesn't get online or anything like that, then there's some real trouble, right? And, there's some more issues there. But this does look like one of those where we have the bad news bottom. Now we have kind of a kitchen sink earnings. And, I talked last week, we start to see this stock closing above 320 consistently. Pretty good sign. Bottom's probably in. It could trade it on higher. So far, I have a portion of shares that I want to own. I want to buy more. It's only a partial position. I traded some weekly call options last week, like I talked about on video. Right now I'm not in any options. I'm just looking to buy some shares. I still haven't pulled the trigger. Right. It's one of those things I'm not too in a hurry, right, with it. I don't think this is the type of market where you have to be in a hurry about things. And, we'll kind of see how it plays out for the next couple days. Starts to hold above 320 pretty consistently. I will, add to a long-term position there. As far as short-term option position for the challenge, get a signal, I'll go, right? Signal happens, I'll jump in, right? All right. Now, when we look at what's going on with the coronavirus out there in the market, or around the world, I should say, it's very interesting and, sad in many regards and scary in a few other regards, right? There's a lot of opinion out there, right? You have the whole sky is falling crowd, right? Which you always have in these things. The sky's falling, world's coming to an end. Go buy all the water you can, and bunker down into your end of the world cellar, right? Your doomsday cellar, and you'll be okay, right? You have that extreme element. And are they going to be right someday? Yeah, they will, right? We'll see. But are they going to be right now? Probably not, right? The odds would be against it. Then we have the other side of the crowd, which is that crowd that says, hey, you know what? Everything's fine. Gee whiz. This will be figured out. Yeah, it's a short-term hiccup and big deal. It's not that big a deal, right? And we have those two extremes. When I talk here, I'm not talking about those two extremes. Those two extremes will exist, and both of those extremes will not change their mind no matter what. Right? It's like ultra-conservatives in politics and ultra-liberals in politics, right? They're going to have their views. They're never going to change. And even arguing views with them just doesn't matter, right? Because it is what it is, never going to change. So, why bother, right? When it comes to the market, though, a market is a little more, human in nature, right? And what's a normal kind of initial reaction to what's going on, right? Well, think about a basketball game, right? Have you ever been to a basketball game where, any other sports game, and you're in the crowd, you're in the home crowd, and you have the official make a bad call, right? It's the first quarter. The ref blows the whistle. It costs your team 2 points. And, what do the fans do? They boo, boo. Okay. Are they that enraged? Are they that angry? No, it's a call in the first quarter. Big deal. You can overcome it. It's one thing. All right. There's an initial reaction, right? And in the market, we saw an initial reaction, right? Let me just annotate it here. We saw that initial first quarter boo, right? But what happens? If the rest of the game goes on and the officials don't mess up any other calls, the fans are just cheering the game. They're not getting on the officials' back or anything. Yeah, you have a few extreme fans who are going to boo everything, right? And you have some fans that aren't going to boo anything, no matter how bad it is, right? Those extremes exist, but that's not who we're talking about. We're talking about the general crowd. The general crowd, boo, hiss, all right, it's over, and they go back to watching the game. But let's say in the second quarter, there's another bad call. What are the fans going to do? Boo. It's going to be a little louder? Yeah. But, all right, they're going to try to remain rational, right? There's this natural tendency to remain rational, to look at it and go, okay, it's second quarter, it's one call, it's not that big a deal, we can overcome it, blah, 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 right? This rational element, persists. Then you get in the third quarter. Now there's 2 more bad calls. The boos get louder, right? Those that were rational, what's happening now? They're losing a little bit of their rationality, right? They're going, man, it's getting to the end of the game. This could cost us. Now what happens the next time the official blows the whistle and it's a good call? What do? They're going to boo it, right? You go from fans that are not really engaged in the officials to now fans that are booing even good calls, even when they know it's a good call, because they're booing everything that's happened up to that point. They go to this irrational state. They go to this state where they're going to boo anything and everything, and it doesn't matter what the news is. It doesn't matter what the call is. They're going to boo it. And for the rest of the game. And there's nothing the ref can do. The ref can't do anything except get to the end of the game. Markets do this. Markets do this a lot. The initial news factor, yep, they're going to boo. They're going to sell. But they're going to try to remain rational. Okay. All right, it is what it is. It's not the end of the world, blah, blah, blah. And they try to stay rational. But if there's another knock, right, what happens to that? What happens to that rationality? Starts to falter. And then if there's another knock, it starts to falter. And then it becomes to where, hey, even positive developments get sold because, this is all going to end in tears. We're going to lose the game. It's just, you go from this rational mentality to a very irrational mentality. And that's where panic sell-offs come in with the market. We saw this with Ebola back in 2014, right? Where, the initial reaction to Ebola was, okay, is what it is. All right, there may be some issues there. Okay, we got to sell, some of that a little bit, but, not that big a deal. It's not the end of the world. Yeah, some people are going to, lose their lives, which is very, tragic. But at the same time, the world will continue to spin. And we saw, these kind of sells here with Ebola and the market trying to stay and remain rational even after our bad call or our bad call, right? We get a couple officiating bad calls, and the market's trying to stay rational. It's first, second quarter. But then what happens? Now we start to see further breakdown. Now there's more whistles, more fouls being called. Market goes into this irrational state of selling. Panic. Are we going to get into this irrational state? Yeah, we could, right? But this is not something that is strictly a global contagion type of thing for the markets. Hurricane Katrina back in 2006 and the devastation that it caused. It did something very interesting with oil, right? It was reported that the hurricane was going to land and come. And there were some worries about hurricane, and we saw market kind of move up. And then, it was, okay, this is what Hurricane Katrina is going to be, and the market sold off. The market, this was before Katrina made landfall, but, there were some reports that, hey, this is going to be pretty bad, and it's going to knock out some oil and everything else. And the market tried to remain rational, tried to remain calm, tried to remain, hey, you know what, this is... it's going to be a short-term disruption, but it's not going to change the global supply and demand picture for the long term. Market tried to remain rational. But as time went by, it simply couldn't. As it made landfall, as other things happened with it, as it was worse than expected, as more things went offline, it couldn't remain rational, and we saw oil go from 63 to 70, right? 10% move there on it. Now, that's not, overly dramatic for oil, but the initial reaction was to stay rational, was to stay calm, for the markets. And, we are seeing that right now. We are seeing the markets right now attempt to stay rational, attempt to stay calm, attempt to say, hey, you know what? It's all going to be okay, blah, blah, blah. And that's great. That's great. But if we get another bad call, what's going to happen? We're going to start to lose some of that rationality. If we get a third bad call, we're going to lose a little bit more of that rationality. And it's a process, right? Not an event. And we've talked about that several times, about this process element, not event element. And so we'll see how it all plays out. But the next dip is not going to get bought up the way this dip's getting bought. And the dip after that isn't going to get bought up until, the next dip get bought up. And we will start to see some panic come in should the coronavirus, worsen. Now, I'm no medical expert. I'm not an expert when it comes to global pandemics. I'm watching and looking at the same stuff that everybody else is, right? And I can jump on YouTube and I can see sky is falling stuff, and I can see, hey, chill out, stuff. I can turn on the news and get that stuff. But when it comes down to what the next chapter is, nobody knows. We can guess to it. We can speculate, right? I kind of speculate it's going to get worse before it gets better. But, that doesn't necessarily matter. That's not what the market is, pricing in or looking at here just yet. But I do know how the market reacts, and they do react as a crowd in a basketball game reacting to officials. And should there be another whistle, should there be another negative factor that comes in that's, drives negative price action, is going to turn rational people into irrational, beings that are going to react, very negatively. And the more we have of that, the more irrational it's going to get, and it's going to snowball on itself. Right now, if we just get word that everything's hunky dory, fine and dandy, nothing wrong, fine. Markets can consolidate here a little bit and then break out to new highs and go. And we just kind of go, okay, coronavirus accounted for the consolidation. And that is a possibility of what could happen. But if we look at other pandemics, to be done in 1 or 2 days, has not been the norm there at all. All right. So thanks for hopping on. Have yourselves a great day. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.